Thanks for stopping in the Everything Money channel. This is an interesting episode. We've done hundreds of videos over the years, Mo, and we had this idea. If you're interested in trading, whether this is day trading, Mo, momentum trading,
long-term
trading, we thought about how can we. I represent you out there. You're watching. I'm guessing you're just a normal person like me. Maybe you're not incredibly intrigued or knowledgeable about investing, which is where I was for a long time, and I'm learning with you. And I thought I'd love to get into trading. If I could make it my new hobby, as opposed to magic cards or just watching TV, we're doing some research and trading. Maybe I can make some money. Again, folks, with our real estate calculator and the Everything Money software that you get as being a patron, you can see that if I can take my returns a year from the standard market of 10% to something like even 12%, at the end of your life, we're talking millions and millions and millions of dollars of difference. And so here we are. I'm an employed person. I call it 3 jobs. I'm primarily I'm a wedding photographer. I do 15 to 18 weddings a year. I own a company that operates a small portion of my time per week. It's a spray graphite company. I have a sample here. And of course, I'm the handsome host of Everything Money. And so with kids, a wife, 3 jobs-ish, I don't have a ton of time to do this. So we want to streamline this idea. If you're employed and you'd like to be a trader, this is a series for you. So in this video, handsome Mo here is going to pull up the general scheme of like once we get our charts set up for trading, what are the 5 things we need to look at on a daily, weekly, bi-weekly basis to start learning the process of trading, day trading, long-term trading. And maybe one day we get in that bid and ask nation, our middle Patreon tier, and that Mo will be helping you through this process. But for now, I introduce the Egyptian dreamboat that is Trader Mo. Mo, welcome in. How are you, my dear friend?
Thank you. Let's do this.
What is the goal of what we're bringing to viewers right now?
So I came up with this idea to give you guys what I called the employed investor. So if you're out there and you don't have time to sit on your computer all day, don't even have time to check your computer once a week, something like that, but you want to get involved with trading, this is what the goal of this series is for. I call it the employed investor because you don't have time. I'm basically going to do the work for you. You're going to follow along. You're going to understand what's going on. I don't want you to just mindlessly follow me, but I want to be able to give you something to follow so you can slowly get into trading while you have a busy life with kids and this and that like you do.
And why should a viewer like yourself trust someone like you? What are your credentials, Mo?
Well, I mean, I've been doing this since I was 14 years old. So I'm 32 now, so that's a pretty long time. Honestly, to be honest, I don't have a losing year yet under 0. I haven't beaten the market many years, but I have never gone under 0. So the point of the way that I do this, my goal is to mitigate risk. You're not going to get companies that go up 10 times with me. It's just not going to happen. That's not what I do. I look for 15 to 20% returns as my home runs. They happen. Sometimes they don't. But my losses I look at as let's lose no more than 10%. And to be honest, like a couple trades that we've made this year in the bid and ask nation, we've made 1 or 2%. I consider that a loss. That was a bad trade. It was money that sat there for multiple weeks on end, didn't really do anything, made 1 or 2%, and it's like, yeah, let's just.
And how much money are you managing or trading on a daily basis? Are we talking a couple $100,000 or something? What are we talking about?
Yeah, I probably trade for myself. It's probably about $300,000 to $500,000. Okay. Each trade is about $100,000.
That sounds like a lot of money to me. So, okay, and then tell me this: the second you say trade, I think a viewer at home like yourself might be saying, "This sounds scary, and I'm going to lose money." And all I know is these BS day traders. Mm-hmm. This is gambling. Mm-hmm. How do you counteract those statements?
That's exactly right. And when I think trading, that is still what I think of. Anytime that I say trading, I'm just like, okay, I lost so many people. Because people go into trading and they come up with all these fancy patterns and this and that. And I try to simplify things so much for you and break it down because I don't think this needs to be difficult. This is so mindless to me. You follow a couple things that I'm going to show you in this video. And it's been proven by the 300 plus people in the Bid and Ask Nation that just come in, follow my system, do not deviate from the rules, and you will make money. It doesn't need to be fancy and use all these Italian terms like Fibonacci and this pattern, wedge, and this and that.
I love his first album. I would say, Mo, is like, some people think of day trading. Obviously, that sounds dangerous. And I have spoken to people in this world who are actively trading $500,000 on what they say on CNBC and on the news. So this is none of that. This is rules based. Let's get into it. But what am I looking at behind you and what the heck's going on?
Okay, so for those of you that are brand new, I don't mean to push you out of the way, but I think that we shouldn't go into the super basics of this, because I think that this is for people that kind of have a clue at this point. Do you agree?
Okay, go ahead.
Do you agree?
I have a clue, yes.
Okay.
And so you're right. I don't think you can just come off the street.
Yeah.
I've been managing my own money for a couple years now. Right. I get the volume. Keep going.
Exactly. You understand the terminology. Now, if you want to start from the ground up, literally, you have no clue what's happening right now. Join the Bid and Ask Nation. There's a Trading 101 series. I break it down from the absolute basics, and then we start to build up. So the first thing I look at, and this is Walmart, for example. This is a stock that we own right now in the Bid and Ask Nation. I'm going to show you why we bought the stock and what I looked at to get there. So the first and foremost, what I'm always going to look at is my weekly stochastic, because all what I do is long-term trading.
Okay.
So the weekly stochastic is right here. This is my trend. All this area right in here. So this is my trend. This just tells me what the trend of the stock is doing on a week-to-week basis.
This graph is a year, a couple days? What is this?
This graph right here is 3 months.
3 months.
So each one of these candlesticks
is a day.
Each one is 1 day.
Okay, keep going.
Okay. So the first thing that I did, that I always do, is I look for stocks that are crossing. So this red line right here, this horizontal red line running across is the 32% area. I have found that if you try to make money with your stochastic, your average trend line, moving between 32% and 80%, that is what I deem the sweet spot. That's where you're going to make the most money. It's going to give you the highest probability of making the most money. So the first thing I do when I start flipping through tons of charts is I look for stocks that are just starting to cross into that sweet spot area with the red, it's the %K line, that's your trend line.
Okay, so these two lines are these moving averages at the bottom here, and you have two red and yellow, and then our horizontal lines is our 32 and 80%.
And 80% is on top.
You've set these. Are these standard, or you've set these numbers?
I've set these up myself. You can put them at whatever you want, but I have set them at 32 and 80%.
Keep going. These make sense. This is a sweet spot. I love that sweet spot. Keep going.
So the sweet spot, this in between this area is where you are going to make the most money. So right when you cross into that 32% area, that's when I start and I go, okay, now I want to start looking at volume. Volume is basically how many shares are being traded per day in that stock, and volume, look at it as gasoline to a car. Volume is energy. If you don't have energy, you can't go forward anymore. So let's go over to our daily chart. This is just a little bit more detailed. You can see all these lines up here. These are moving averages.
It's getting confusing now already.
We're just going to, for the purposes of this, and you're the employed investor, let's just ignore this right now. What I'm looking at right now is our volume down here. So let's go to April 5th. That's the day that we bought it as a Bid and Ask Nation. April 1, 2, 3, 4, 5. That is right here. So this day is when we got this massive influx of volume. This yellow line that you can see, that's the average volume, and you can see that we broke average volume that day. So that means that there was a lot of energy coming into that stock.
Something happened, some news.
Maybe some news happened, maybe earnings did not happen, but maybe some news came out. Something that happened that gave Walmart finally enough energy to break through that 32% area and just start moving up.
So a bunch of people, to increase it, just went out and started buying Walmart.
Correct.
Okay, keep going.
Something could have happened on CNBC. Who knows?
Mm-hmm.
All right. Now let's look at the next thing. Any resistance points. So when I look at a stock, there's always going to be resistance and support points. I'm going to zoom out here. So actually, let me tell you, when I bought this stock, I always go in with kind of an exit strategy. And I looked at this saying, okay, back in February, this was a big gap down for Walmart, okay?
Mm-hmm.
My goal was to buy the company in here and just ride it up and fill up that gap that happened, that breakdown. And this was kind of my resistance point. I'm not expecting still Walmart to get over that 147, 148 area.
What is this huge gap? People just suddenly got...
That was probably earnings.
Okay.
Any gap that, like, there's something bad that happened. Some kind of bad news came out for Walmart that made that gap down. And what the gap down is, instead, you can see, all right, let's use this for example. This big green candlestick right here. That happened during the day. The move happened during the day. That's why you have the big full green candlestick. When you have a gap like that, it's after hours. So the company will, let's be at $150 a share. Bad news comes out. It opens the next morning at $140 a share. There's a gap. There's a $10 gap. Gaps
always fill. You always say
fill.
this.
Exactly. They always fill. It's just in what time frame do they fill? My hope was that we were going to buy it here and we're just going to start filling. And as you can see, the stock price, it's slowly creeping up on me. So we're getting to that filled area right there. I think that we can get up here into this 147, 148 range.
So gaps down excite you.
They do.
Okay, keep going.
If they're for the right reasons. Like earnings on Walmart. I mean,
come on.
It's Walmart.
But fraud, EBIX fraud.
Different story.
Different story.
Like Peloton, like we were talking about.
Yeah.
Maybe. Okay. That might be bad.
All right, keep going.
So okay. So I just looking for different resistance points. And the resistance points I'm looking for exit strategies, where the stock is going to get to, where it can drop to, something to that effect. Next thing I go for is my favorite, the bid and ask. What is the bid and ask? Everybody says it, and it's become a joke. It's the difference. You have your bid price and your ask price. The bid is what a buyer is willing to pay for that stock. The ask is what the market maker or the market specialist wants to sell that stock for.
Is one always higher than the other?
Yes, the ask is typically higher than the other because they want to get more for that stock.
I see.
So
who's doing the bid and asking?
The market maker or the market specialist, depending on so in the NASDAQ, I might be wrong on this. In the NASDAQ, you have a market specialist. It's one person that is kind of controlling what's happening.
He works for my Fidelity account, or?
He kind of works in the market, actually, technically. It's
he or she, of course.
Technically a computer.
Oh, computer. Oh, boy.
In the S&P, you have a market specialist. Maybe I said this wrong. Either way, I think there's multiples in there. So you're kind of fighting against multiple people that are trying to price the stock for you and then coming to an average.
Okay.
So it really semantics. It doesn't really matter.
Okay,
it's
so
a computer
the
program.
ask is always, they always want more. They're always going to ask more.
Correct.
And you're going to bid low.
So on my charts, and really, I mean, you can customize any charts like this. We recommend you use TradingView. I pay for these charts especially. I like them because you guys see this color coding. This is when my red line and yellow line are crossing. It's very easy for me to show you on camera. But I look up here at this bid and ask. So the bid right here is this is currently $141.16. The ask is $141.17.
Not that big of a difference.
That's as close as a difference as you're going to get.
Okay.
You're never going to get a 0-0 consensus. I look for companies that are a 1 or 2 cent bid and ask difference. That means there's so many people out there that go and trade and they say, every time that I buy a stock, it drops on me instantly. Because you're not looking at the bid and ask difference. You're going to buy a stock that has a bid price of $140 and an ask price of $141. That's a massive spread. All of a sudden, the market maker decides to bring the price down on you to $140.50. That's going to drop the price because people want to pay less for it now.
Uh-huh. Oh, I see.
So when there's consensus, the stock price is not really going to pull back on you that aggressively.
So you're saying you want it within a penny?
Within a penny.
Regardless of the price, whether we're trading
now, if you're trading
Tesla
in Amazon
to Amazon
or something like that, you could stretch your bid and ask difference to probably 10 cents. But remember, we're talking about a $3,500 stock.
Okay, wow. So you want it close, baby.
You want it close. For something like this, I probably wouldn't go over 3 cents.
So a bid and ask,
$140 stock.
Bid and ask comes in at 8 cents. We're over this company.
Nope. I'm just waiting. I'm going to wait. In the morning, you're often going to see a bid and ask difference of, it could be a crazy amount because you have overnight trading, you have futures trading, everything's kind of settling down. So this is a good thing to point out.
You don't trade till 10:06.
Exactly. And people say, why 36 minutes? Because over the past however many years, I've decided that 36 minutes is a good number for me. For all the BS overnight to settle down, all the futures trading to settle down, everything just kind of stops. And then everything kind of calms down at 10:06.
So the market opens at 9:30 a.m. Eastern, and you're trading at 10:06. That's
Correct.
when you start your gauntlet.
That's when I start seeing the bid and ask differences really slow down and everything kind of just chills out.
Just for me, just bid and ask under a penny.
That's all you need to know right now.
Perfecto mundo.
Okay,
Keep
next
going.
thing we're going to look at, and the last thing we're going to look at. Let's zoom in real quick. When do we actually decide to buy the stock? Mm-hmm. So we talk about engulfing candlesticks. So you have candlesticks that look like this. These are called dojis, really nothing. You have candlesticks that look like this with long wicks on top. You have candlesticks that look like this with long wicks on the bottom. All this means is the stock price moved up that morning, down that day, and just finished in the exact same spot that it opened overnight.
Okay.
Here, you had a stock price that moved way up on you like this, and then it just pulled back and just closed the day right here. So the stock price ran up on you, but it pulled back a little bit.
Okay.
Down here, exact opposite. Stock price dropped on you big time, and then the stock price recovered a little bit, and you closed up here for the day. Okay?
Okay.
I don't want to buy on any of those because those are not giving me confidence to say that the stock price is where it should be. I want to buy on candlesticks that look like this. It is pretty much a full engulfing candlestick that's completely filled. There's consensus on the price. It moved up that day, and it didn't pull back on me, saying that everybody's basically saying, okay, the stock price should be up at this level. It's not, let's get to this level, and then at 3:30 that day, pull down and go back to what it was before.
This is an indicator that I should have bought, or that I should be start getting interested.
That you can buy. So engulfing just means that this candlestick is larger and kind of engulfs the day before. So you have a candlestick like this the day before. You get a big candlestick like that. It kind of eats the previous day. You get good consensus. Money's coming in. Volume is good. You have a good trend. There you go. Then we were in Walmart.
Wow.
That was it. And then what did we do from there? Literally, you guys could see that we just have these candlesticks that are really doing nothing for a very, very, very long time. Yes, you had an okay candlestick here that was thick, but it wasn't engulfing this way, taking out the previous day. It was going down on you. So we have literally waited, what is this, long period of time. I added right here again, because we got an engulfing candlestick that really took out all of these previous days, more or less.
So you haven't made any money on this?
We've made 140, couple percent.
Oh, okay.
2%.
And your downside risk here is?
My downside, that's a very good question. When do you sell?
Uh-huh.
It all goes back to trend. When my red line is still on top of my yellow. I tell my guys in the Bid and Ask Nation every day, our trend is fine. The most important thing about trading is that the trend is your friend.
Good Lord, this seems like it takes a lot of discipline and patience here, Mel.
It does.
I'm getting scared now.
It does. It takes discipline, it takes patience, it takes repetition. But think about anything in life. Anything in life that you do just takes discipline and repetition. There's no way that, Paul always says it, you're not just going to go out and just become Mike Trout. It ain't going to happen. How many times do you think that guy swung a bat in his life?
Tens of hundreds of thousands of times?
Probably millions.
Yeah, you're right.
This is all repetition. And I always say to the new people, go in there and trade on paper. So what that means is just go and trade fake money. That's how I started. When I was 14, I was in the computer lab at school and I started trading fake money. Then I asked Dad for some real money and here we are.
Mm-hmm.
But just go and just do your reps over and over. And how do you get bigger if you want to go to the gym? You do reps. Yeah. Just keep doing them over and over and over. It's the same thing in this. Sounds scary. It's going to be okay. I will guide you through the whole way. I'll hold your hand.
So you have some money in here. And what happens if you get, is it possible that one of these big red scary guys pops out tomorrow and you lose a ton of money? How do you avoid that? Is this something where I got to be at my work and after lunch, I got to freak out, put down my tuna sandwich and sell 10 grand in Walmart?
Good question. So we can put what are called stops in place.
Of course.
It's a very good idea to do. So let's look at actually, let me go on here. Let me see what this level is. Let's say $135.83. That is the low of this candlestick right here, 135.83. We can put a stop at 135.83.
So when you buy, you're putting this stop in, and if it ever reaches it, it's going to sell off.
Yep, exactly. You can go inside your brokerage account, and it's going to tell you what kind of order do you want to put in. Instead of putting a market order, you put a stop loss order.
I always do the market. I'm an idiot.
I always do the market too. I don't have a stop in place right now.
Okay.
I don't think it's necessary to have a stop in place right now for a long-term trade like this, especially when my trend is very nice, still moving up. We still have good separation. Everything's looking perfectly fine with this.
Now talk about, keep going, I'm sorry.
No, go ahead.
Talk about the cookies. What's the cookies all about?
The cookies, you want to go back to the sweet spot. Mm-hmm. So that's what the sweet spot is. And I wish I would have pointed this out earlier in the video. This area in the sweet spot, I look at it like it's a cookie jar. So you have all your cookies inside of here, this and that. And when you're coming up from the bottom, you're just crossing over that 32%. Look at all these cookies that you get to eat on the way up.
Sounds delicious.
It's great. Now, when you get into this part up here,
the top 20%, above the 80%.
Above 80%. That's what I call the overbought area. It means that the stock has had a pretty good run up, and now it's getting to the point where maybe there's a higher probability that they think the stock price is going to turn down on me. people always think that after you see a great run in a stock, oh, I want to get in because everybody else is making money. I want to go make money. Well, when you get into this area, you have that higher probability of the stock turning down on you. That's when I call it, that's when you're looking at the crumbs of the cookie jar. All you're trying to do is just grab what's left on top. So let's say that this run is over on Walmart. Instead of you making a run from $139 to, I hope, $147 eventually.
Yeah.
You're going to try to grab it from 147 to 148 with very high risk that it's going to fall back down on you.
Crumbs.
So the moral of the story is when we look for stocks, look at the trend, find ones that are coming through 32%. That's the kind of stocks that you want to buy to make the most gains.
To end the show, can we look at Peloton? Because this is something drastic and radical that just happened.
Let's look at
it tanked. This is just yesterday?
Yesterday.
So I would love to see and prove to me that these rules work, Mo. And when you would have get it, oh Lord, look at that.
So, man, okay, let's zoom out to, let's go here.
And like Paul was saying, whenever you're viewing this, we've analyzed Peloton a couple times. We talked about this massive drop in stock price due to a recall. And so this has been a long time coming, and this is just the last needle. What am I trying to say? Last needle in the last straw that broke the camel's back. Yeah. So talk about what's going on this one.
So yesterday Peloton fell 15%, and that's what you had here. Now, this is getting a little bit more detailed, and this is not something that we're going to do for the employed investor because we're not going to go short and stuff. But really shorting, people complicate this too. Literally what I just talked about with a stock trend going up like this, and that, all you do is flip the chart over and you have a short. People really like to complicate what shorting is. All it is the chart is upside down. So instead of us going up through this sweet spot area,
look at that. We're going down from the 80 stochastic down to 32.
Exactly. We're starting at 80 and we're coming down to 32. So looking at it, your red line crossed over your yellow to the downside. Nothing really happened in this area, and then boom.
There you go. There's
engulfing candlesticks right here.
You hit that 80%. Look at you go.
And you just start coming down with it and just adding on engulfing here. You had an engulfing candlestick, could have added. Okay, you get a little bit of a rebound. No big deal. Your trend is still down. All this time coming, nothing really happening, and then engulfing candlestick yesterday. Boom.
There
and that
oversold
there it goes area. Again. But to be honest, I mean, look at this. This was when you added here, it was $128 a share. Today, you could still confidently short at $82 a share. And this was not a scary trade at all. Look, we didn't really have any movement on this. Scary
to you, perhaps, but this is very scary to me.
It's because I've been doing this for a long time and doing the reps.
Okay.
There's people in the bid and ask nation that are shorting this. They've been doing this for what, 3 months?
Yeah.
And it's not scary to them anymore. Just repetition.
Stay tuned. We will continue this series. As you see, my mind is blown. Perhaps yours as well. It's funny not to have Uncle Paul here. No one was.
Isn't it weird, isn't it?
There's no middle fingers being thrown. We haven't had a potential lawsuits on our hand. Hopefully, we haven't pissed off too many people. Just you and I all cuddled up in the studio.
It's like a cuddle session here.
Yeah. So, all right. If this is news to you, I hope you can take it in. Maybe watch it again. I certainly will. And stay tuned for our Employed Investor series with Dumbass Seth, listening to Trader Mo and his all of a wonderful
rules. I got you guys.
So, yeah, tickle the thumbs up on the way out. Get on that Patreon. The link is in the description below. And that Bid and Ask Nation, the middle Patreon tier. You know we love that Bid and Ask Nation. Because Mo, you're basically doing, what are you doing for people in the Bid and Ask? How are you helping them on a daily basis?
I mean, every Friday, so I do the live show every morning at 9 a.m. Eastern time. And every Friday, I like to talk about the wins and losses. I asked people this week to send me losses for tomorrow. I don't want to talk about any wins. And there are none. But the point is that these people are following the rules.
Mm-hmm.
If you follow the rules and do what I tell you to do, you're going to make gains. We had people in April making 15% in the month, 8% in the month, 9% in the month. There's people that are making a lot of money out there. This $65 a month thing that you guys are paying, I mean, it's a great value if this is something that you're interested in.
Tickle a thumbs up on the way out. We love you. See you next video.